and why we've taken a bit of play here. It's called the inflation break-evens. We have introduced you to it several times in the past, and when you look at inflation break-evens, they are very hot at the moment. You can see that they are as hot as they were on Friday, and with that heat coming into the inflation break-evens here, you can see that that's going to cause this bond price at the top edge a little bit of grief. One would imagine worst case scenario is you're going to start seeing spreaders coming in for this bit of business. And, if bonds do start getting short and that's starting to pop interest rates higher, then of course that's going to put an offer into top line equities. And that's something that does concern us as an equity trader. That's something that we're a little bit worried about at these very elevated bond prices. There is seemingly an inflation break-even storyline that hasn't yet been priced into equities at these extreme high prints. So one of two things can happen, of course. Well, one of three things. The bond price sells, inflation reduces, or a bit of both on a spread. It's going to be either of those four options. But if this starts to rally, of course, this will mean that the bond price will stay kind of stationary for a while and it'll go nowhere. So, if we start to see that oil price dropping out, for example, then of course that could take some of that pressure off that inflation break-evens narrative.